The following is brought to you by goldseekmint.com. Silver and gold bullion directly from the mint. goldseekmint.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm joined by Ed Steer, Director of the Gold Antitrust Action Committee and author of the Daily Gold and Silver Report with Casey Research. Welcome, Ed. Great to see you.
Oh, great to see you too, and thank you for having me on.
Ed, what's happening with gold today?
Well, what's happening and what's been happening for the last several years, and especially during the last downturn we've had since February, is that a small group of U.S. bullion banks led by J.P. Chase and a handful of other traders on the COMEX are shorting the metal and using high-frequency trading techniques to drive the price of silver, gold, platinum, and palladium, and all the other precious metals, along with copper, down to low levels so they can buy all the long contracts they can and get everybody else to go short. And they've succeeded in doing that, and that's why the price is as low as it is today. There's nothing to do with supply and demand at all.
So say we had no manipulation happening in the markets whatsoever. What do you think the gold price would be?
Well, it would be a number that would make your eyes glaze over, to tell you the truth. And nobody knows what the true free market price of gold, silver, or any of the commodities is. Right. Because they've been basically distorted out of all recognition from what they should be. And if the powers that be, led by J.P. Chase, decided they were going to let the prices run by just standing back and basically doing nothing, we would see a complete repricing not only of gold and silver, but of all commodities. Wheat and oats and all the commodity producing nations that produce, we get most of their currency, as hewers of wood and drawers of water, would have a resource boom of biblical proportions. And that's basically what the banks are trying to prevent doing, so they don't abandon the US dollar and any other paper currencies.
Do you have maybe a ballpark figure what you think the price would be, or do you guys internally
we don't talk about it because there's just no way of knowing. You just pick a number. I would say it will be north of 5,000 and anywhere to say 5 and 15. I don't know whether they're going to allow to run it to that high or not, but we could also get an overnight repricing. There's a lot of talk of that where we're just going to wake up some morning and the gold price is going to be some other bid price.
Right.
So to pick a number out of thin air for gold or silver or any other commodity when this is all over is really a mug's game, but it's going to be very large.
Well, I guess, are you saying if we were to get into a deflationary cycle and then the Fed needed to reprice gold, say 40, 60, 80% higher overnight?
Yeah.
So gold could be somewhere between $5,000, $6,000, $7,000.
It could be any number they decide
Right.
they want it to be. They can just pick a number saying basically, we want to back our currency with 40% gold, so therefore we got this many dollars in circulation, the price is going to be X. And that's what they could do. And
since all commodities move in tandem, then you would see repricing of all commodities.
Every commodity, I can absolutely guarantee you the price of wheat won't be $7 a bushel of Prince Rupert when this is all over, because all commodities are going to go with it.
Now, let's talk about Barclays. They recently settled $41 million for gold price fixing. Now, how much of a problem is gold price fixing still today?
Well, that's just, I had to laugh when I saw the story come up about the Barclays trader who actually fixed the London PM gold fix because he got caught with his hand in the cookie jar. And the fixing, and it really is a fix. They can jockey those numbers any way they want, but the problem just doesn't lie with the fix, with the AM fix or the PM fix. It's the entire commodity exchange itself that is run by the CME group. They let the traders run rampant over the price of commodities, and this gentleman at Barclays who got caught is just symptomatic of a much larger problem, and the fix is only one of many problems.
It's ironic that it's called the fix.
Yeah, it's the fix for a good reason, because they fix the price. You don't see a fix for tin or rubber or wheat or sugar or cocoa. It's only gold and silver. Why do you need a fix for them if you don't need a fix for everything else?
Now, have banks changed how they set the gold and silver benchmarks?
Well, no, it's still a very small group of banks. I think there's 5 in gold and 3 in silver, and Deutsche Bank has gone out of there now because they the government just basically said you're out of it. So they ended up backing out of the fix. So there's only 2 in silver. Their pricing hasn't changed. They just go in there and they meet secretly to set the price based on the sell orders and the buy orders they have today, and they can game the system any way they want. And since the guy at Barclays got caught, it's obvious that's just one of many times it's happened.
So is it an indicator at all that people are becoming more aware, or that seeing some of these fines take place? Does it give you any kind of indication of a change in sentiment, or?
Well, you know, the thing is that I was gratified to see somebody get caught with their proverbial hand in the cookie jar on this. And I think that underneath, because it's such an opaque market, the gold and silver pricing mechanism and the LBMA and everything associated with the precious metals is so secretive that nobody really knows if it's having an impact underneath or not. I'd like to think it does. Like to think that Deutsche Bank, having pulled out of the silver and gold fix, that is a huge, when that happened, I just said, oh my goodness. So there's obviously things going on under the surface that the general public, including myself, have no knowledge of. So we may see a big change someday, but right now, like I said, the market's so opaque, you just never know.
What do you think has to happen for the gold price to go up significantly from where it is now?
Right now, JP Morgan just to put its hands in its pockets and let the market do what it would like to do. We'd have a market clearing event, like I said, that would make your eyes glaze over, literally.
And how likely do you think that is?
Yeah, I don't know. I just look at the situation as it exists today and say, you know, the price of gold is X dollars. It should be here based on inflation, but based on the amount of money they've been printing for the last 25 years. It could be any number. Are they going to let it go? I don't know. Are they going to reprice it? I don't know. All I know is that the situation is set up now on the commodity exchange as far as the longs and the short positions in silver and gold and platinum and palladium and the other metals. If they decided to just, like I said, put their hands in their pockets, sky's the limit. But are they going to do it? I don't know.
Now, where are you seeing most of the big buying coming from right now?
Well, it's all over the press, of course, that China's buying huge amounts of gold. They've only been in the market, a couple of years or something like that, and they're averaging, 80, 90, 100 tons a month. That's a huge component of demand that has all of a sudden appeared out of nowhere, and the price has gone from, $1,900 down to just under $1,300 or whatever it is. I just can't figure out where you get a gold demand surge like that from just one buyer, and see the price crater by $700. It just doesn't happen. So the central banks of the world are buying gold. Some of them are. The Chinese are buying it where we can see it through Hong Kong, and they're buying it in other places like through the Beijing market where you can't see it at all. So in their way, they're doing the same thing everybody else is doing. They're buying the stuff hand over fist. We just can't see it. And the other central banks are doing the same.
Now, moving over to India, the BJP party just came in. Do you think that they might lift the import restrictions? And if they do, are we going to see a significant move?
Well, I've been watching this like a hawk, as you can imagine, and all indications are that they are generally moving in that direction. I know the jewelry manufacturers and the importers are all just jumping up and down for joy about this. I expect something will come of it. I don't know what's going to come of it, but I know something will, and we'll find out in the course of time, whether it be a couple of months or whatever, but there's no question about it. India is going to go back to importing gold. It's just a matter of how much.
And what do you think countries like India and China think about the manipulation that's happening?
They certainly know what's going on. The Chinese know about it, the Russians know about it, and if they know about it, you can bet that just about every country and central bank in the world, anybody that matters in the precious metals industry, knows about it too. So it's a big secret underground that they all know what's going on. And this Barclays incident, it was just, like I said, the tip of the iceberg. And one of these days, the covert activities of what they're doing are going to become overt, like the gold pool back in the 1960s. And then everybody's going to be aware of it, but everybody now, it's becoming so obvious. Jim Ricker says it's so obvious now, the manipulators should be absolutely embarrassed by what they're doing.
And do you think that countries like China or Russia could exert any influence on ending some of the manipulation? Is there hope for that?
Vladimir Putin could do it tomorrow. All he'd have to do, is get on television and say that we're not going to export any more gold, silver, platinum, or palladium until JP Morgan Chase, HSBC, USC, Citigroup, Deutsche Bank, and Barclays end this price management scheme for the gold and all the precious metals, so our commodity producers in our country and every other country in the world is treated fairly, and I can guarantee you'll be over in 5 minutes.
And we had a fantastic question from one of our viewers, Randy Millard at Randad Trade. He said, Ed, what country will be the first to initiate a gold standard for their currency?
Boy, that's a good question. It certainly won't be the United States unless they're absolutely forced into it. They're a welfare warfare state of the first order of magnitude. I think it's going to come from some country like China or Russia. It's going to have to be one of the major powers because they're the only ones that have got the economic and banking clout to back it up, and they've got the gold to boot, and they're gold producers as well. So it's going to be somebody that's like that steps up to the bar.
That has the gold to
That has the gold to do it, and the United States may do it in advance themselves because they can see the writing on the wall coming. But it's going to be one hell of an event if it does happen.
Well, Ed, it was a pleasure having you on today, and we look forward to having you back again soon.
Yeah, thank you for having me on.
Thank you, Ed.
Bye.